Evening, everybody. Thank you very much for joining in. This side Rahul as the Chief Executive Officer of Hedge Consulting LLP. And today we would be covering a technical video about the possible P note investment in India. P note stands for participatory notes. We are not talking about promissory notes. We are making this video from the perspective of the foreign institution investor who wanted to be invest in India. But before giving this, let me give you a little background. There are a lot of things which are happening across the globe. We know that there are a lot of things which are happening in the US also. If we keep this political thing apart, which is happening in the US, like there are a lot of economic development which is happening in the US also. From the economic development, the recent statement, in fact the first Congress address which the Donald Trump has given, he clearly said that he is interested in investing approximately $1 trillion in the infrastructure. Donald Trump is a pure businessman. He is roughly 70 years and he is running the show. And he is having a good umpire also. I strongly believe that if he is committed enough to spend roughly $1 trillion, he would surely invest $1 trillion in the US economy. We can very well see that. From the indices also. Dow Jones, which never touched 20,000 during Obama, is now trading roughly 21,500. Immediately once Donald Trump took over, the Dow Jones went to 19 from roughly 18,500 to 19,500 and now it is trading 21,500, which is a history. Believe me, this is the history. And US indices are going very good. On the other hand, the Standard Poor is roughly I think 2,600 and Nasdaq is close to 5,300 something. US dollar index, which is a benchmark dollar index, it is going at 102, approximately 102, practically this is 101.8. Everything is going in the favor of the dollar, and the forecast which we had given earlier in 2016 before election that if Donald Trump is going to be the president, then it's going to be a dollar bull year, that is turning true. Now the point is, from this side, if the dollar would continue to gain the strength, then the impact would surely will come on the Indian rupee and Indian rupee will surely depreciate. I know majority of the people, those who are watching the video, you must be thinking that why Indian rupee is trading at 66.83 and on the other hand it should have been depreciated. There are predominant reasons behind this. This is just a seasonal in nature. The reason is the foreign institutional investors is pumping money in India, assuming that Indian economy will grow at the rate of 7.6%, and that what Indian economy did also in the recent quarter. In fact, after the note ban, I strongly doubt about the credentials of that GDP. Even after note ban, you are growing at the rate of 7.6%. It means had note ban not been happened, you would have grown by 10%. I strongly doubt on all statistics which Government of India or Central Statistical Organization is currently publishing in the public domain. They are at least 50% overstated. I don't think that Indian GDP is growing more than 4.5 to 5%, and I can substantiate that. Snapdeal is firing people. Bharti, Airtel, all telecom sector is in the state of wind up or consolidation. Snapdeal, your Flipkart, everybody is firing people. SDFC Bank fired more than 4,500 people. IT companies have freezed their recruitment for this year. Economy is in recession and GDP is growing by 7.6%. I don't know how it is growing, but the video is not about that. So it is only because of these numbers the foreign institutional investor is pumping the money in India. Since foreign institutional investors are pumping this money, this has kept INR little appreciated. But don't forget that today INR is trading at 66.80. It has not touched 66 against a lot of expectation. We personally feel that this is a very good time to buy for importers, and especially those who have a hedging program. Example, those who have a long-term commitment. Example, external commercial borrowing. Example, PCFC funding unhedged. Example, you have some foreign currency payables. We personally suggest that 66.80 is the right time to hedge. I'm not saying that you should hedge for a longer tenor. I'm saying that you should hedge for at least 3 months. So if sitting today you are on roughly 4th of March, then you should cover April, May and June. March is of course to be covered, because in case of import and export, we always tend to agree that the first month should be covered, right? So at least 4 months to be covered. We expecting that the actions which is happening by Donald Trump and the Donald strength and the dollar strength will continue to push INR up, and we are going to see 67, we are going to see 67 half and probably 68 very soon. I might not be surprised that if by June I would be able to see 68 and half also. After all, how long the government is going to give the fake figures? Because one day you need to substantiate this that with what is happening on the ground. This is something a hard reality of the game. Another side which we are talking about, because I need to give you some background of participatory note, is the Chinese economy. Chinese economy is growing at the rate of 7%. I also do not agree with the what figures they are showing, but anyways, if they are growing by 7%, if a 15 trillion or 13 trillion dollar economy is growing by 7%, on the other hand, a 2 trillion dollar economy is growing by 7.6%, then you can very well estimate that the 1 year growth rate of China would be several years growth rate of the India. But Chinese have one weapon in their hand, which they can fire, which if they want, or their public sector or their central bank, which is People Bank of China, if they want, they can fire this several times before 2021. Because the next meeting of the International Monetary Board's SDR, which is special drawing rights, would be happen in 2021, and Chinese yuan is already a part of SDR. And I would surely expect that by 2021, China would, decimate. China would quit from offshore, which is CNH, and they would move to CNY, completely CNY. Like in 1980, Japanese were having the offshore yen, onshore yen. Chinese will quit offshore yuan and will go to onshore, onshore offshore yuan, CNH versus CNY. The weapon which they have is the devaluation in the Chinese currency. They already given a demo in 2015 when they devalued yuan by 10% in the successive weeks without a delay, and that too after markets. Nothing has happened in that regard. No regulator ever pushed that, or they were never entered into any kind of fine or an etc. They just did that. In that regards, Chinese would be highly competitive in nature. If you people are watching financial terminals, then you would have get to know that from the last 1 year approximately, the yuan fixing is between 6.85 to 6.95, which is a very high level. If you compare this with the historical data, this used to be 6.2, 6.3, but from the last 1 year, this is 6.8 to 6.9. This is very high. And in my personal opinion, if they would have devalued yuan, which is a very imminent probability Chinese are having, then in that sense they would be able to push this fixing to 7.2 and 7.3%, which would make their goods more competitive in nature. In that sense, the ultimate effect would come to the US and India. But considering the very good and stable government we have in the US and the good leadership of Donald Trump, in that sense, the impact on the US would be limited and the impact would come on the India. And I see that Indian rupee would surely depreciate from here. I might not be surprised that if by June and July, due to roughly 6.5 or 7% growth rate and the little pressure which they are getting from US, which is the tarific barriers which US is pushing, if they pushed up this devaluation, then yuan might go to 7.2 as well, which will make them highly competitive in nature. In that sense, Indian rupee will move to 72. But why I told you this story? I told you this story because all the people, those who are investor in P notes, which is participatory notes, people those who are sitting outside and investing here. Remember, participatory notes are exempt from capital gains in India. Those who are sitting outside and investing in India, they should not do investment right now. Because if they are entering in the economy now, then they are getting roughly 66.80. Even if they do POS swaps, principal only swaps, they will end up 66.80, maximum 67 or maximum 67.10 they would end up, and they need to pay the POS premium over the period of the time. So the ultimate benefit would be very less for a participatory investor. Secondly, the yield curve of India is also falling down. But yes, I do appreciate that INBMK curve, which is a GSEC curve of India, this has fallen more than the IRS curve. If you carefully look at the financial terminals, you would get to know that GSEC curve has fallen more than the IRS curve. In fact, both IRS and the MIFOR curve is invert right now, which means it is higher for a shorter tenor and it is longer. It is like that. This is invert. It is higher for a shorter tenor and it is low for the longer tenor. This is longer tenor. This is shorter tenor. Now the point is, since the yield are falling and exchange yield is this in India and exchange rate is rising, in that sense, if I would be at a position of the participatory investor, I would have not invested in this country. I would have wait till April and May, when US dollar would have pushed up, or dollar index would have pushed up to 103 and probably 104. The 10-year G-Sec in the US might have pushed up to 2.6 to 2.75, and then I would have invested this money in India, and I would have get an exchange rate of approximately 67.60 or 67.80, right? And from that I would have created several strategies here, which is say range forward, options, seagull, straddle, strangle, butterfly, candor, ratio backspread and all, to get the value of my money. And when it comes to the portfolio investment, I never been invested in the so-called mutual funds and fixed income, maybe the I would say the term deposit and all. I would have invested in a little good instrument. And believe me, India, the participatory notes will rise. Although the officially SEBI data states that now the participatory note investment has fallen to 10% of the foreign portfolio investment. Vis-a-vis it was 40% in the November 2007, and I would totally disagree with the same. I would totally disagree with the same. I disagree that the sitting today in India, when doing participatory notes is a very easy transaction, the regulator never be able to understand who is sitting outside India and who is tactfully investing. How can the participatory investment fallen from 40% to 10%? So basically the purpose of the video is just to let you know that if you are an investor who wanted to do the participatory investment, then you should wait, because participatory investment has never been fallen in India. We should not rely on the government statistics, in fact any government statistics, because government statistics are not true. There are many European countries which are still claiming that they are not bankrupt, but tactfully they are already bankrupt, which is technically known as technical bankruptcy. They already have technical bankruptcy. So if you are a P note, then you should not invest here. At the same time, I would also like to suggest that if you are a P note, then you should, that rather than passing from other sub accounts, you should pass to your own sub account. So you should not pass to somebody else's sub account. You should pass to your sub account. And if you are a P note investor, then you should invest more in, I would say, using tactical strategies like range forward, like ratio forwards, like seagull, straddle, strangle, candor, butterfly spread, condor spread, and others. One thing, last but not the least, if you are a portfolio investor who is bringing dollar here, converting it INR and investing here, then, and especially at the time when the Indian rupee is heading to 72 and 73, then I would like to suggest you a fact that you should invest this money. You should invest this money not here. You should invest this money here, but you should hedge this money outside. You should hedge this money. I would say you should hedge this money. I would say in offshore, which is Singapore and other. Because if you hedge using non-deliverable forward contract, because in India several option strategies are not possible: condor, butterfly spread, digital spread, and in fact for call and put spread also there is a lot of catch. So such spreads is not possible. So if you really wish to have such spread, then you should hedge this using your offshore sub account and hedge in offshore, which is Singapore and others. This is how the P investment should be in India. I would request all P investors to please wait for the appropriate time to come before investing in India. And at the same time, you should start investing in India when you see INR at 69, not right now. And before entering into the India, you should see the POS rate also. In fact, if you look at the complete MY4 rate, which would be very good, because this would be a complete swap rate, that is also very good. And at the same time, you should hedge that. I don't suggest you to hedge in India, because the premiums, although the 1 year premium is 3 rupee 90 paisa and 6 months premium is 2 rupee 17 paisa something, right? You should hedge this at offshore, because here you will get lot of option like range forward, ratio forward, seagull, straddle, and others. This was the purpose of the video. We would like to, this was the purpose of the video. We thank you very much for your time, and Treasury Consulting LLP is doing very fine. We are very soon coming up with our foreign exchange desk, and we are also very pleased to share that we are now into consulting domain also, and we are also very pleased to share that we are launching our another magazine on frauds and forensics, to whom we titled is The Fraudster. This would be the first magazine of India which would talks about fraud, forensic, analytics, and others. This won't be a monthly magazine. This would be a magazine which we are publishing twice in a month. So twice in a month, which is 6 times in a year, which we are going to publish this. And first version which we are launching in March 2007, which is 31st March 2007. We also would like to appraise you that we opened the registrations of our club, which is the Mavericks, and this club is not a political club like we have several clubs. This clubs will talk about, will talk more about, I would say, this club is a more professional club, which would talk about webinars, seminar, conferences, and all such things. You are welcome to register in that club. The charges are very nominal. This is $50 per year. As of now, the last point, probably 15 days from down the line, you would be able to download all our presentations and everything from our website directly. Our website, you would be able to download presentations, webinars, your newsletters, your research, and everything. You would be able to download. So thank you very much. You know my contact, 9899242978 is my contact. Thank you and have a great time ahead.